Hello, this is Tim Congdon, Chairman of the Institute of International Monetary Research at the University of Buckingham. This is the monthly update on the global monetary scene. And this time it really will be about the global monetary scene, and I'll be surveying monetary developments in the main economies. I have in the last few months been focusing on the United States, where developments have been extraordinary. But this time I want to widen the picture. We're coming up to the end of August 2020. There is a lot of talk about a vaccine for the COVID-19 virus. And I think we have to expect that through early 2021, a vaccine will be available. And by the middle of next year, at least in a medical sense, the world will be returning, or even have returned, to normal. From the economic front, of course, there's going to be a legacy of all the things that have happened in the last 6 months. And that's really what concerns me today. Now, I'm going to be talking about many countries. So let's just first of all have a look at the world's six largest economies, and then we'll come to talk about each of them individually. Roughly speaking, the United States and China are of equal economic weight in the world nowadays. If we measure things, what economists call current prices and current exchange rates, the USA is still quite a long way ahead. But on a purchasing power parity basis, which in many ways is preferable, China is ahead. And these figures relate to 2019. In 2020, US output's going to fallen quite a lot, whereas China will be rising slightly. So the Chinese weight in the world economy will be greater. If we combine the United States, China, and the Eurozone, we have roughly a half of the world economy. And then the final three countries here, Japan, India, and the United Kingdom, on the current prices, current exchange rate basis, we have about 2/3 of the world economy. So these six economies give us quite a good handle on what's going to be happening around the world. There's then, just beneath these economies, there's a whole host of nations with GDPs that are around about 2% or so of, to some measure 3% of world output, Russia, Brazil, Indonesia, Mexico, South Korea, and so on. But I just simply haven't got time to cover all those in the present session. I will be saying a few things about Canada, though. Now, before I move on, I think it's quite important to say at the very start that the period from kind of end of February until the end of May, maybe the end of June 2020, saw policymakers in the main countries, particularly the advanced countries, doing everything they could to promote economic activity, given the calamity that they were facing because of the coronavirus. Obviously, the measures to the lockdown, plus self-isolation, social distancing, and so on, these had devastating effects on some industries. Obviously, hospitality, restaurants, hotels, travel, aircraft, all these kind of things, devastating effects. And then the governments responded, governments and central banks responded by doing everything they could to promote economic activity. Now, one has to say, to some extent, the loss of output was not because of lack of demand. It was because, of course, laws were passed to stop people working and producing. At any rate, the result was a very marked acceleration in the growth of the quantity of money in most economies, and in the advanced economies, some of them, a really dramatic increase in monetary growth. Now, in our work, where money growth and the growth of nominal income are related, and the growth of real money and real economic activity are related, this is something that obviously needs to be highlighted. And let's just first of all look at the United States, to some extent recapping on the last few presentations, but let's just notice these numbers here. Now, the USA in April had an increase in the quantity of money of over 7%. 7% in 1 month. That figure was higher than in any full year in the previous decade. That is the extent to which US macroeconomic policy went through a total upheaval in this period. There were, before and after April, also rather high growth rates of the quantity of money, and in the year to June, the increase in the quantity of money was over 25%, the highest figure since 1943 in the Second World War. Now, there is a huge debate about the significance of this. One has, however, to say that this was, economists talk about the Great Depression of the 1930s, the Great Moderation, the stable outcomes of the 1980s and 1990s, the Great Recession of 2008. Quite honestly, what happened in spring of 2020 was the Great Splurge. That is the American scene. Let me emphasize, and this is quite looking ahead, that in July, US quantity of money rose only 0.3%. Okay, so 7% in April, again, figures like 3-4% in March, May, June. July, only 0.3%. So really very much a return to, perhaps a return to normal, certainly a dramatic slowdown compared with the great splurge of spring 2020. Now the Eurozone. I'm going to do the advanced countries first and then talk about developing countries. Eurozone, crucial to look at the axes, by the way. The axis on this diagram, the top point is 25%. For the American one, it was 90%. You can see that acceleration of money growth in the Eurozone as well. Briefly, the 3-month annualized rate went through 20%. But the annual rate is still, for the year to June, still in single digits. There's been a notable move, but it's not dramatically out of line with things that have happened in the last 20, 30 years every now and again. Japan, however, we've got a chart that looks rather like the American one, but again, you must be very careful. Look at the axis. The top number in the left-hand axis is 18%. Not 90%. So in Japan, there's been a marked acceleration in money growth. The 3-month annualized is up at around about 15% or so. The annual rate is up at 6%. Now that 6% is the highest figure in Japan since 1991. It's the highest figure for almost 30 years. And it's going to be interesting to see what happens in Japan, because they've tried to get inflation up to 2% and failed year after year. They needed to raise the growth rate of broad money, broadly defined. They're obsessed with the monetary base and so on. They need to raise the growth rate of broad money. They are doing that now. And if we see further numbers, annual growth rates of 5% plus, I'm pretty confident they're going to get inflation at 2%, maybe even a bit more. UK, 3-month annualized got up to, 30%. The annual rate of change is in double digits, but only just. So somewhat higher than in the Eurozone, but not much difference, and much less than in the United States. Now, what about the two major developing countries we track? China. This chart goes back to 2004, and in that first 10 years of that period, there's been very rapid trend rate of real output growth in China. Still this sort of hyper-growth period as they were becoming a middle-income country, having been a very poor country in the 1970s. And you can see there's that incredible growth rate of, if you like, the China's great splurge in early 2009. Very important, by the way, in boosting the world economy coming out of the Great Recession. Now, come on today. Well, there's been a bit of a bounce, but it's not very dramatic. And indeed, we're not even in terms of the annual rate just slightly in double digits, but it's hardly very different from what we were at the end of 2019, just a little blip really. And much the same can be said about India. Now, India has got, in many ways, a lot of problems at the moment of a completely non-economic kind, tensions between religions and so on. I would say that the little upturn in money growth we can see there, it is the result of an increased budget deficit in India and the financing of that deficit from the banking system. Nevertheless, again, it isn't that dramatic. Now, let's then try and bring all of these different countries together and draw some conclusions. It's pretty clear that the acceleration in money growth in 2020 has been more pronounced in the advanced countries than the developing countries. I haven't brought in places like Brazil and Indonesia. They too would have these similar kind of patterns, but there wouldn't be the sort of explosions in money growth that we saw in the United States. I might just say, so the American situation is really the egregious one, the extraordinary development that is going to, I might expect, going to be discussed for years to come. The rest of the industrial world, the rest of the advanced countries, there's been a pronounced upturn in money growth, but it hasn't been at anything like the same scale as the United States. I should just mention here Canada, obviously the United States' northern neighbour, perhaps same kind of intellectual influences at work on policy. The money growth in 2020 has been sort of between the US experience and the Eurozone. The annual rate is up to 15%. These figures, by the way, year to May, they're a little bit behind other countries. There has been a sharp acceleration. Canada has about 2% of world output. So that's the first set of conclusions. The implication of all this is that the money acceleration, the money explosion of early 2020s, particularly in North America. Because of the importance of North America to the world economy, it's going to be very supportive of economic activity as we come out of the COVID-19 depression. And I think that when you combine sort of North American splurge with what's happened in other developed countries, and this not quite so pronounced, but the upturns in money growth in China and India as well, we should be expecting a really very strong rebound in economic activity in early 2021 as the medical situation becomes is normalized. That's a controversial conclusion, obviously driven by the monetary trends, which at the moment, let me just emphasize, are being supported by what's happening to asset prices. Stock markets are generally pretty strong around the world, which fits in with this story. But it's not just that. What we're seeing at the moment is, you look at websites, in many cases, items that ought to be available aren't available. That suggests that sales have been ahead of production. That suggests that there's been, particularly in the second quarter of 2020, a rundown in inventory, a decline in holdings of stocks, raw materials, finished products, and so on. There will then be, as we go through the end of 2020 and through into 2021, deferred capital spending. There'll be some pent-up consumer demand. But on top of that, I suggest there's going to be a pronounced inventory rebuilding. Obviously, we can get a sense of this by looking at the GDP numbers for the second and third quarters of 2020. We haven't got numbers as yet, but that, I suspect, will be a large part of the rebound of early 2021. And when we look at this, say 5 years from now, we look at the pattern of world output, it will be a V-shape. Very strong conclusion. That's what's implied by the monetary background. What happens from here on it depends a lot on policy. But let me also say that it isn't clear to me that the inflation prospect outside the United States is all that bad. I mean, I think what we may well see in 2021 is a big bounce back in some raw material prices, possibly in the oil price, a bit like 2010 after the Great Recession, when around the world many countries had a return to inflation, even so soon after the Great Recession. But The place where we have to worry about inflation is the United States, possibly Canada as well. And may I just, before I move on and talk about policy developments from here, say that two items of evidence fit in very much with that conclusion. The first is that the stock market gains since March have been greater in the USA than elsewhere. That fits in with the money explosion in the USA. The second thing is the dollar has been weak since March. It's fallen about 7-8% against the euro and other currencies. And both these things fit in with a view that the USA is going to have a problem controlling inflation after what I've called the great splurge. Now, before I move on, one has to just put in the caveat that policymakers, of course, have discretion. They may suddenly change their tune. And it does look as if in the USA, the Federal Reserve possibly is actually internally perhaps on the quiet, having second thoughts. There's that contrast between the 7% jump in M3 in April and the 0.3% rise in July. However, in the USA, we have got the talk of another huge fiscal package. The Democrats in the House of Representatives are talking about a package of as much as $3,000 billion. That would fully match what's already happened under the Trump administration, and it does seem likely that Joe Biden will be the next president. Roughly speaking, try and work out the arithmetic here, broad money currently is about 25 trillion, somewhat larger, by the way, than the US economy. If we had just a fiscal package of, say, $1 trillion, $1,000 billion, and it all financed from the Federal Reserve and the commercial banks, that would add 4% to the quantity of money. If it was 3%, it would add as much as 12%. Now, I don't know what's going to happen here. All I would say is that we need to be watching these announcements, and if we do see a huge fiscal package and it is financed from the banks, then there's going to be a resumption of high money growth. We just must watch this space. In the Eurozone, there's much more caution, I think, on the fiscal policy front. Big debates going on between different schools of thought and also to some extent between different countries. Obviously with the North European countries generally being much more cautious about fiscal and monetary policy than the so-called Club Med countries towards the Italy, Spain and so on. But it also should be noted that the European Central Bank has talked about 1,350 billion euros of asset purchases, of which so far only 500 billion have been completed. So here again we have a source of possible money growth acceleration from the slowdown in June and July. We must again just watch this space. Japan, fascinating, because they have broken the mold, in a way. They have in the last few months done things that really have pushed up the growth of money in a very noticeable way. If they keep on doing that, my suggestion is that they will indeed see inflation of over 2%, reflecting the higher growth of the quantity of money. My overall verdict, therefore, is of a strong rebound in the world economy, with America to the fore, but also America facing an inflation problem. And we must keep on watching these numbers and keep on watching policymakers. Thank you.